Back to basics part 3. So we've done ascending trend lines, descending trend lines, how I view the correct way to draw to connect the levels. We've done my reversal on the candlesticks and explained what it looks like in the trends, in the swings. Switching from line charts to candlesticks and back again. The line chart on this one I don't think I did is quite clear. Low, high, high, low, higher, high, pull back, test of old resistance here and here, acting as support here and back on the candles, resistance, resistance, breaks, pull back to test as support, continuation. So I don't want to get too much into re-entering and stuff like that using the same method, but it's quite obvious. You can see it: high, low, lower, high, lower, low, and then a low, high, high, low, high, high, pull back, or sorry, pull back here, but test, break and test of old resistance clearly, because it's pushed price down here. It's closed above, and what does price do? Absolutely rocket. You can see how my old indicator, my proprietary indicator, gave me the heads up. Above zero, turned green, that was the old entry. This one's slightly different. You trade the best entry, not always the only entry, but the very best entry is to trade when this histogram pops up and closes above the 20 level. That's that little dotted line there. And as you can see, it's done just that prior to our entry. In fact, it did it earlier, so that's where the histogram actually oh no, there, that's the close. No, it did. No, because this was the entry based on my method, and this is the entry based on the histo alert, the RSI. Now, I always personally wait for my own methods, because I've only been watching this for 3 or 4 months, but the more I watch it, the more I learn about it. And remember, this is the daily time frame, so we could have been attacking these levels using the H1, H4 time frame, so we could have traded validly from here to here based on the lower time frames. And that simple move there to there is just about 200 pips by the look of it, 194 pips. The point being, once we've had this trigger on the weekly, this critical resistance level broken, a weekly high, then we can use my method to trade this. We don't have to use the daily and do all of that. You can be, there's 194 or 5 pip gap between here and here that could have been traded, and because we know that level needs to be broken with a valid reversal based on my method, we know we can attack that level, because price has to keep breaking levels in order to continue. And the power of that weekly reversal, I showed you how all of these candles, it didn't reverse, it didn't reverse, it didn't reverse, it didn't reverse, finally it reversed. It's such a rare occurrence that you know it's significant, and that's it. That's the secret of this method. Same with here. You know you've had the valid reversal signal here when this green was broken by that weekly candle. So following rules that I'll explain in the future, but you should be able to work out for yourself from now, bearing in mind I've told you that this works on every time frame, you can trade this down. And that move there was only 661 pips. Okay, so it's a powerful method in my opinion. It's why I got 8 trades yesterday, and all of them, the first trade yesterday morning was 5 pips, but that's another important lesson. You only take what the support and resistance levels allow you. If you get an entry and it's 5 pips before that level there, because you've taken the entry on a 5-minute or 15-minute chart, then expect to have a load of pain up here, because this is a daily chart. And that is why when you open some of my other videos, you see a spaghetti junction of descending lines, ascending lines, and yellow and green levels. Don't be frightened off by those, guys. Persevere with my method. Persevere with my delivery, if you like, my unprofessional video delivery, because I'm not after a subscription like all these other guys. This is the point of this. I just want to pass on my experience, this unique method of looking at trends, in my opinion, and support and resistance, and the precision of highs and lows of candles as resistance and support. People will tell you along the way, you can't have precise levels. All I'm looking for is precise levels to be broken and closed through. Highs of candles get closed through, that is a valid reversal. Lows of candles get closed through, that is a valid reversal to the short side. Add indicators, the holy grail of oh no, indicators lag, never trust indicators. That's belt and braces. Those myths are absolute rubbish in my opinion. The indicators, in my opinion, must be non-repainting. What's the point of having a green bar here telling you to go long, that in the next minute or whatever, next time zone bar, the daily in this instance, it's turned red? Utter useless. This one's non-repainting, this one is non-repainting. You can use, as if you need a secondary indicator, you can use MACD. I've tested that, it's pretty reliable, but I don't want more than 2 indicators on my chart. I'm definitely not getting rid of this one, and this one is priceless. Whoever invented it, I don't know, thank you God. Indicators work. You could probably trade this RSI on its own, because it actually follows the trend, it follows the price as well. But this is a work in progress, trust me. And that's the other thing about a solid system. When you get a solid system, and I promise you this is solid, you can then test your indicators against your price response dynamic. So in tune with this that I could trade it naked. Nothing else on my charts except my horizontal support and resistance lines taken from the candlesticks and the green and red candlesticks on their own. And then I added the indicators, because if I'm looking at the 4 hour and this is green, then I know that I can only be looking for longs. If it's changed from red to green, I've got to be looking for longs. Or in this instance, daily from red to green, I've got to be looking for longs. Using the candlestick analysis to make sure that this isn't just a not a false signal, but a late signal. I don't want to be getting in, let's say for example here, long, because of the RSI histo, because I've had all this up move here, and it's obvious you've got the up move there, and when I get onto the MA that you see on my charts, that's the hourly 8 EMA, that's loaned to me, taken from, if you like, Digger 1 and his excellent strategy on Forex Factory. That's a recent addition to my charts as well, but they are all surplus, they're all extra, if you like, added tick boxes that will help novice traders. If I tried to explain this stuff without anything else on the chart, it would, unless you were an expert candlestick analyzer, then it might blow your mind a bit. So I know people love indicators, I have in the past. That is why they're on my charts. They do aid my trading. I don't need them to trade this method. You can choose to use them or not use them. As I was saying, MACD is very good. CCI Histo Alert is also not Histo Alert, CCI Nuff. Google it, that's a lovely little indicator, free as well. And stochastics, you can get a histogram for that as well. I love histos because they're just like a traffic light system. As I said, if I'm looking at H4 and it's just crossed over from 0 to positive for a long trade, and we've just had a pullback, the probability of when this changes green and the price rocketing is massive. And if that doesn't help your trading, I don't know what will. Add to that the lower time frame, 453 pips, 58, whatever, my eyes are bad. If that doesn't aid your trading, I don't know what will. Like I've said in previous videos, method, whether it be off Fibonacci's or Elliott wave or pivot trading, you get this reversal off of a pivot level and you know you're good to go. Trend analysis and so on and so forth. Break of that hourly 8MA. And that was a little trick I picked up with Digger that I never used before. I always used MA's crossovers. The hourly 8MA, just putting it on every time frame. So on the 8 it becomes the 8 4x 32. It becomes a 32 on the 15 minute, and that then becomes the 96 on the 5 minute and the 480 on the 1 minute. And then you can just flip through your charts and the MA will stay in the same position in relation to price, and I think that is also a priceless addition to my charts. Only recent again, you never stop learning in trading. So a bit of a pep talk video for part 3, but hopefully it will help you. Thanks for watching and have a great day. It's getting near my trading time now, so I may well have a little bit of time to analyse the charts and a coffee.